Hi everyone, welcome to another video lecture of ACC Taxation F6 paper, and remember that this lecture is for Finance Act 2017. So this lecture is relevant if you're going to appear for exams up until June 2019. Right? So in the previous couple of lectures we looked at first we introduced ourselves to our exam, how the exam looks like, myself, and I also give you a little overview of the syllabus which we will be going through, and we also looked at the income tax pro forma, if you remember. And after making the income tax pro forma, then I told you that we will gradually move to the different sections of income tax pro forma. And in the previous lesson we looked at the interest income and the dividend income and how to treat them. We also looked at the nil rate bands as well, which are provided to us in dividend income and the interest income. Alright, now we will look at some more aspects. Now first of all, I've listed down personal allowance on this side. Here it is, personal allowance. While making the income tax pro forma, after the net income, I told you that we will deduct the personal allowance out of the net income. Now personal allowance within the UK, it is 11,500 for our current tax year, although it varies every year. So it was 6,000 something couple of years ago, not even couple of, about 5-7 years ago, and it could be 15,000 pounds in coming years. So it varies and it is set by the UK government. Anyways, for our current tax year it is 11,500, which means that up to 11,500 you do not have to pay any tax. So basically it is an exemption available to every individual within the UK. HM Revenue and Customs has set a threshold. They say that if you are too poor, if you are earning up until 11,500 per annum, then you do not have to pay any tax at all. So they are not so cruel. They know that if you are earning less money, you can't afford to pay tax. They say it's fine. However, if you are earning more than 11,500, then only you have to pay tax on the excess over 11,500 pounds. So you do not have to pay up until 11,500. However, you do have to pay whatever is over 11,500. Right? So this exemption is available to every individual within the UK. Now, as I said, this purpose of this personal allowance, purpose why the HM Revenue Customs is giving us a personal allowance is that HMRC says that if you are a poor person, they assume that if you are earning 11,500, you are a poor person, you can't afford to pay the tax. So basic aim of 11,500 is to, if you are a poor person, you can't afford to pay the tax. That's why this exemption is given to you. All right. Now, what if you are too rich person? And in that case as well, if you are too rich, say for example, if you are earning more than 11,500, you are earning 15,000 pounds, 50,000 pounds, 70,000 pounds, you will still get 11,500 exemption. So up until 11,500, you do not have to pay any tax. Whatever is in excess of that, you will have to pay any tax. But there are certain circumstances when this personal allowance will be reduced. You will not get 11,500, but you might get reduced personal allowance, or you might not get any personal allowance at all. Now, what are them circumstances? When you are earning too much money, you are too rich. HM Revenue and Customs says if you are earning 100,000 pounds a year within the UK, then you are too rich person. And if you are too rich person, then you will not get 11,500 personal allowance. All right? You will not get 11,500. You might get reduced personal allowance less than 11,500, or you might not get any personal allowance at all. So we now need to know how to reduce the personal allowance. What personal allowance will we get if I am earning 110,000 pounds, for example? So there is a specific way to calculate it. We will see it now. Now, in order to see the details of reduced personal allowance, we first need to know about adjusted net income. So what is adjusted net income? While going to the adjusted net income, let me give you a little overview of the benefits of pension. So pension is basically an amount. We will look at the pension in details as well. But for now, pension is basically amount which we contribute out of our salary or out of our income while doing the business. So I am saving some money and I am putting in my pension fund so that when I get retired, I can rely on that money. And that pension could be made in from two different ways. One is personal pension, where I will be personally responsible to manage that pension, Another one is occupational based pension, where my employer will be responsible for making the pension. And please remember, in both cases, so there are two types of pension. One is occupational pension and the personal pension. In both cases, both myself and my employer can contribute. So if I look at personal pension contribution, I can contribute in my personal pension and my employer can contribute in my personal pension as well. Now look at the second one, the occupational pension scheme. Of course, in occupational pension scheme, my employer will be contributing, but I can contribute as well in my occupational pension scheme. All right, we will look at the occupational pension scheme later on, but for now, just concentrate on the personal pension contribution. What is the benefit of personal pension contribution? Why would I contribute in my pension fund? Now, assuming if I do not, put money in my pension fund, if I get retired, HM Revenue and Customs gonna give me some benefits, all right? So if they are going to give me benefit anyway, which is state-owned pension, they are going to give me the state-owned pension anyway. Why would I bother making my own pension? Is there any benefit? Yes, there is a benefit. So if I contribute £100 in my pension fund, assuming that £100 is 80%, other 20% will be paid by HM Revenue and Customs. So what I mean to say is, whatever amount you want to see in your pension fund, you only have to pay 80% of that. Other 20% is paid by HM Revenue and Customs, and what you get in pension is 100%. All right. So that is one benefit, that you only have to pay 80%. Other 20% is paid by HM Revenue and Customs. What you get is 100%. So you basically get 100%, not the 80%. All right. So what is adjusted net income? That was one benefit. Let's look at another benefit as well when looking at the adjusted net income. So what is adjusted net income? Adjusted net income means we will take net income before personal allowance from the income tax pro forma, which we have seen in our first video. So we will take net income before personal allowance and we will deduct less gross personal pension contribution. So we will deduct the amount which we have contributed in pension, our share plus the HM Revenue and Customs share, because it is saying the gross amount. Gross amount means 100%. So the 100% amount of personal pension contribution. So if we deduct that amount out of the net income before personal allowance, net amount is called adjusted net income. All right. So if our adjusted net income is £100,000 or less than that, we will get 11,500 of personal allowance. All right. However, if our adjusted net income, this figure, is greater than £100,000, then we will need to reduce our personal allowance of 11,500. How can we reduce? We will take adjusted net income, whatever the adjusted net income is, assuming it is more than £100,000, less £100,000, which is the threshold. Whatever the amount is, we will divide that by 2. We'll take half of it, and that is the amount. So after dividing it by 2, whatever the amount is, we will reduce our personal allowance by this amount. Assuming this amount comes to £500, this £500 will be deducted out of 11,500, so our reduced personal allowance will be £11,000. If, say for example, this figure comes as £11,000, we will have to deduct this £11,000 out of 11,500, which will make us our personal allowance of just £500, like that. So whatever amount this is, this amount will have to be deducted out of 11,500. But please remember, if this is more than 11,500, it will not go into negative. Minimum we can reduce our personal allowance is to 0. All right. So whatever this amount is, this will be deducted out of this one, so it will eventually make it to 0. All right. So that's how we will reduce our personal allowance. So as I said, one benefit was that we only have to pay 80% as far as personal pension is concerned. We only have to pay 80%, other 20% is paid by HM Revenue and Customs. So what you get is 100%. So that is one benefit. Other benefit is that if you pay more amount towards your pension, chances are you will get 11,500 personal allowance. If you do not pay any money in your pension, chances are you might get reduced personal allowance, or you might not get any personal allowance at all. I hope that it is making sense. So assuming, for example, if this net income before personal allowance, if it is over £100,000 and you do not have anything here, you do not have contributed anything in your personal pension, then this amount is going to be exactly this amount, right? Because it is 0 here. So assuming if it is £110,000, this will be £110,000 here. So adjusted net income is £110,000, which means it is exceeding £100,000. Now let's look at another scenario. £110,000 here, but you have contributed £10,000 towards the pension, so the remaining amount is £100,000. All right. Now, if it is £100,000, then we do not need to reduce our personal allowance. Our personal allowance would remain as 11,500. So I'm just trying to make you understand the benefits of personal pension contribution. All right. So that was another benefit as well. Apart from that, there is another benefit as well of personal pension contribution. So here it is, personal pension contribution. I told you about this benefit. I also explained this benefit as well. It helps you gain more of the personal allowance. The third benefit is it will add whatever 100% of that contribution is. You have to pay 80%, other 20% is paid by HM Revenue Customs. Whatever the gross amount is, 100%, this will be added in your basic rate band and the higher rate band. So whatever your basic rate band is, which is given to us on page 1 of your lecture notes, 33,500 I think. So your normal basic rate band is that you, after deducting the personal allowance, up to 33,500 you have to pay tax at the rate of 20%. Likewise, it will also add in your higher rate band. So you will have extended higher rate band and an extended basic rate band. Both of them will be extended. All right. Another thing as well, just like the personal pension contribution, there is another thing as well given to you in your lecture notes on chapter number 1, gift aid donations. Now, if you make any donations under the gift aid scheme, then the same treatment would apply like the personal pension contribution, that you will have to pay 80% towards your gift aid donations. Other 20% will be paid by HM Revenue Customs, and and the 100% of that amount that will extend the basic rate and the higher rate band. So both of the benefits are for personal pension contribution and the gift aid donations. Right? So our next topic is child benefit income tax charge. There are different kinds of benefits given within the UK by HM Revenue Customs. Because they are collecting the tax, their responsibility is to look after the people of UK. One of the benefit is child benefit. Excuse me. So if you are earning less than £50,000 within the UK, you can claim child benefit from the HM Revenue Customs so that you can look after your child. So basically this benefit is given to the families who have the child, but they are earning less amount, so they cannot look after their child because they have less money. So HM Revenue Customs will give some benefit, £5,000, £7,000, so that they can look after their child. All right. However, HM Revenue Customs says that if your adjusted net income is over £50,000, then you should not claim child benefit child benefit. If you keep on claiming the child benefit, then there will be a penalty on you that will be known as child benefit income tax charge. Now, how to calculate that penalty? Let's look at this formula. Excuse me. So first we'll take the adjusted net income. Now see, adjusted net income is coming here again. So whenever you see adjusted net income, it tells us that there is another benefit of personal pension contribution, because we know that how to calculate the adjusted net income. We'll take net income before personal allowance and we'll deduct the gross amount of personal pension contribution. All right. So that's the adjusted net income. So it is telling me another benefit of personal pension contribution, that whenever I contribute more amount towards my personal pension contribution, chances are I might be able to get maximum amount of child benefit. All right. So that's what you can write in your exam as well. Anyway, how to calculate the child benefit income tax charge? So you will have to take the adjusted net income and you will have to deduct the £50,000 threshold out of it. Whatever the amount is, we will have to divide that by percentage basically. So this amount. So that is the percentage. Whatever this percentage is, that will be applied on the child benefit itself. So say for example, child benefit is £5,000 and this percentage is 50%. So 50% of 5,000. So that will be child benefit income tax charge. All right. So basically that's how we calculate the child benefit. Child benefit income tax charge. All right. Now this might not make good sense to you now. We will do an example now which will help you in all of these concepts. Now if you want to note down whatever I've written on the board, you can do so now, because I'm going to erase this thing which I have listed on the board, because I need to do the example which I have listed down here. So please write down this example as well. I will read out to you if you are unable to read it. Mr. Z has salary of Mr. Z has salary of £50,000, a bank interest of £20,000, and dividends of £50,000. Dividends of £70,000. He paid £16,000 in personal pension and receives £5,000 as child benefit as well. Calculate tax payable by Z in tax year 17-18. All right, so that is the question. Now I'm going to make some space to attempt this question so that we can do this example. First of all, Mr. Z, then income tax computation for the tax year 17-18. For the tax year 17-18. Right? So income is always divided into three sections. So non-savings, then savings, and dividends. Right? So first of all, he got salary. So where would the salary go? Salary will always go into the non-savings. If you want to do this question yourself, you can do so, and I would say that you do it yourself first, then watch me do this question and rectify your mistakes. It is always a better idea. All right, so I'm doing the question. So £50,000 is the salary, which will go into the non-saving. Then I got bank interest. I got some bank interest. Bank interest would go into the savings income of £20,000. Then I got, he paid £16,000 as a personal pension, and then receives £5,000 as child benefit. He hasn't got any dividends. He got the dividends of £70,000. He got dividends of £70,000. Right, so he got dividends of £70,000 as well. Excuse me. Now if you want to make the total column here, you can do so. So £50,000, £20,000, and £70,000. And I would make the total here as well. Please make sure you make the total column as well, because it helps you do the question correctly. And then £70,000 as well. So which makes the total of £140,000. Always do the calculations yourself, because I might do some mistakes, then you can rectify the mistakes. Because in the life loss, when I can interact with the students, they always say me that you are doing this incorrectly, then I can rectify it straight away. Because of this medium of recorded version, I'm unable to hear to you, so if I'm doing any mistakes, there is no one to spot the mistakes. So that is why I always ask my students to redo the calculations, because in previous sessions I did some mathematical errors. Say for example, it was £135,000 and I wrote it as £140,000. So you always redo the calculations.